Hey everyone, ARM Holdings is scheduled to report quarterly financial results on July 31st, so investors are curious, should they buy the stock before or after earnings? I'll answer that question in this video. I'll also discuss what investors should look for from ARM Holdings in their upcoming earnings release, how much revenue they should expect, how much earnings per share they should expect, and any qualitative factors they should look for in the company's upcoming release. So there's a lot to cover. Let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So ARM Holdings has been one of the companies benefiting significantly from the rising effectiveness of artificial intelligence. The company works with some of the largest AI providers worldwide, and they're seeing phenomenal growth here. So let's take a look at this. So as the amount of compute to run these complex AI workloads is increasing exponentially, the amount of energy required will increase too. According to a 2023 report from BCG, U.S. data centers already consume around 126 TWh per year, terawatt hours, and this is expected to rise threefold by 2030. So energy consumption from data centers expected to triple between now and 2030. So companies are working to reduce the energy use or increase the efficiency, get more for their performance out of their existing technology. So Google recently announced its first custom ARM-based product, which provides 50% better performance and 60% better energy efficiency. So these will be used to run AI training and inference. And already 10 of the world's largest hyperscalers are using ARM-based chips for their data centers, including Amazon Web Services, Microsoft, Oracle Cloud. Also, NVIDIA is using ARM-based chips because their Grace Blackwell superchip combines NVIDIA's Blackwell GPU architecture with an ARM-based Grace CPU. And of course, the Blackwell superchip is coming out right now as we speak. NVIDIA is shipping it out to products. And by the end of this year, it should start getting implemented into data centers. So ARM working with NVIDIA and benefiting side by side with the growth of NVIDIA. When the company reports its upcoming earnings, I want to hear more about these partnerships, more about the developments of these latest technologies, and how it's working to increase demand for ARM-based CPUs. Additionally, ARM is accelerating customers' time to market and reducing development costs, and can therefore command a higher royalty fee per chip. That's something I want to hear more about as well. ARM's latest technology is providing a big boost from its previous generation technology, and as a result, they're able to generate a higher royalty per chip. I want to see that momentum continue and demand continue, even though they're getting higher prices. So that's something I'm curious about when the company updates its earnings release. So the CEO said that they finished their financial year achieving over $3 billion in revenue for the first time, with strong tailwinds heading into their fiscal year 2025, as AI is driving increased demand for ARM-based technology across all end markets. From the cloud to the edge, all AI software models from GPT to Llama rely on the ARM compute platform. And these models are becoming larger and smarter. Their requirements for more compute with greater power efficiency can only be realized through ARM. So management very optimistic about its prospects. I want to see more of this when the company announces results. I want to see more of this optimism turning into tangible results, revenue growth, profit growth, more deals, more customer backlogs, contracts signed, partnerships announced, all of that. I want to hear more about when the company announces, because there's so much innovation happening in this space. I want to see ARM participating in that innovation. It's in the excellent position, as the management team is saying, to benefit from these rising tailwinds. So in their fourth quarter specifically, they generated $928 million in revenue, which was up 47% year over year. For the full year, their $3.2 billion in revenue was up 21% year over year, and their GAAP operating income was up 80% year over year. So the company is performing excellently. The business model is a very lucrative business model. Licensing and royalty revenue is high profit margin business. And so if you're generating revenue growth, because you're generating revenue growth and that revenue growth is coming through royalties and licensing, that's generating strong growth in profitability. You can understand why investors are optimistic about ARM Holdings stock. Looking ahead, management is forecasting revenue of $900 million at the midpoint when they announce these results. So anything above $900 million when they report in revenue, that's going to be a positive. That's going to be above expectations. The next milestone is anything above $925 million in revenue is going to be above even the highest end of their target. So above $900 million will be a beat on revenue. Above $925 million will be higher than even the highest end of their guidance, which will be very positive for ARM Holdings. The next thing to look for is non-GAAP diluted earnings per share. Management is forecasting 34 cents at the midpoint, and then the next milestone is 36 cents. Anything above 34 cents is good. Anything above 36 cents will be very good, and some number very much above that in the 40 cents to 45 cent range will be that much more positive. This company has a reputation of beating their expectations. In the fourth quarter, they were guiding for revenue of $875 million, and they beat even the higher end of that guidance, delivering $928 million. Same thing with earnings per share. They were forecasting 30 cents, and they delivered 36 cents, which was up above even the higher end of that guidance. So investors could already be expecting a beat on the top and bottom line from ARM Holdings, given their reputation and given the development of this market and the strong growth in this market. So there could be embedded expectations for the company to beat. I'm also going to look for a revision of their annual guidance. Are they going to keep it the same, downgrade, or upgrade? I think an upgrade is more likely at this point. They are forecasting 2025 revenue in the range of $3.9 billion, $4 billion, $4.1 billion at the higher end of that guidance, and then earnings per share of around $1.55 at the midpoint. If they deliver another quarter of beating the top and bottom line, I would expect an increase in their 2025 guidance as well. So that would be a best-in-class performance from ARM Holdings. To beat revenue on the top, right? More than $925 million in revenue, more than 36 cents in earnings per share, and then raising the 2025 revenue guidance, raising the 2025 earnings per share guidance. If the company delivers on all four of those things, then the stock price is likely to jump following the earnings release. Now, the stock price is already expensive. As I highlighted earlier, it could be incorporating those expectations that the company is going to beat across the board and raise across the board as well. It's trading at a forward price to earnings of 88. So all those excellent prospects I talked about already, it might be incorporated into the stock price. So to answer the question, should you buy ARM Holdings stock before earnings? I would say no. I would say the stock is already too expensive. I would say wait and let's see these results. Let's digest the information, reevaluate the company, and make a decision after we look at the information. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.